Now, what was once a top-performing market investment strategy has quickly fallen to the bottom of the heap. Shares of many publicly traded firms that invested in digital tokens, also called digital asset treasuries, have fallen significantly in the recent weeks from their lofty beginnings. The stock prices of digital asset treasuries listed in the US and Canada has fallen 43% this year, with some plunging more than 99% despite holding valuable crypto tokens. Now, these firms are now facing difficulties in meeting the interest and dividend payments on the debt that was used to finance their crypto buying. Michael Saylor's strategy was the first company to use that playbook. With a similar ploy, over 100 other firms were able to make it work through the middle of 2025. Now, earlier in the year, the meteoric rise in the share prices of these companies, now known as digital asset treasuries, became a major market trend. One prominent firm, SharpLink Gaming, soared over 2,600% in a matter of days, but the stock has fallen 86% from its peak, leaving the whole company worth less than the digital tokens it owns. Bitcoin, by comparison, is down around 6% in 2025. Now, Fedor Shabalin, an analyst at B. Riley Securities, said investors took a look and understood that there's not much yield from these holdings rather than just sitting on the pile of money, and that's why they contracted. Now, this year, the S&P 500 has climbed more than 16%, while Bitcoin is down from percent. Now, it will mark the first time since 2014 that stocks have rallied while the token is down. Even in previous crypto winters, digital assets have not deviated from other risk assets this year. Retail investors have been hit hard by the losses and an increasing feeling that the game is rigged. BlackRock's Bitcoin fund recorded its longest streak of weekly withdrawals since debuting in January last year. Investors yanked over $2.7 billion from the ETF over the 5 weeks through to the end of November. Beyond Bitcoin, other tokens have been bruised more in the current meltdown since October. A market vector index tracking 50 tokens has fallen nearly 70% this year, hitting its weakest level since early 2020. After reaching their all-time high, altcoin values have fallen by $200 billion.